What's going on, guys? This is Aaron with Departures Capital. We're here with Hamid Shahbazi, WLYYF CEO. How are you doing today, Hamid?
I'm doing great. Thanks for having me.
Yes, excited to have you on. So, WLYYF Technologies is a digital health company that invests in the future of healthcare. WELL owns and operates medical clinics as well as a telehealth platform serving thousands of patients across Canada and the United States on a daily basis. And the company provides practice management software and tools that power healthcare clinics and practitioners. What else should investors know about WELL Health?
You know, a big thing that investors should know about WELL Health, especially timely now here in April, is we're on the cusp of completing a fairly significant acquisition for the company. We're buying a company called CRH Medical, and we just received the shareholder approval, and we should be closing fairly soon as we get through all the court stuff. CRH Medical is a New York Stock Exchange listed company that had completed 32 acquisitions of their own. They're a leader in providing services to gastroenterology physicians in the United States. They've got 2 products and services and serve over 3,000 physicians. And we're just thrilled to be doing this because you know, it'll add, you know, more than $50 or $60 million in EBITDA to our story, and brings our revenue scale approaching 300 million CAD. So it's pretty monumental. It's a quantum leap for us, and you know, so the acquisition essentially drove you know, more than 120% accretion on a per share level as it relates to revenue, and more than 800% accretion on the EBITDA line on a per share basis. So incredibly accretive. And we did this whole thing with only 17% dilution. And we did this by doing a private placement in subscription receipts for $302.5 million at 25% premium to market when we announced the deal, which has never been done in TSX history. So it's unrivaled in terms of even an analog for it. So we're incredibly proud of that, and we're about to close very soon. And I think it's going to be a major value creating event for the company and shareholders.
Wow, that's a very exciting time for you guys. So the global health crisis has been a huge driving force for rapid adoption of digital health services. How has this affected WELL's acquisition and expansion strategy?
Yeah, it's a really good question. With the pandemic and the acceleration of digital health, you know, WELL got very busy and very focused in terms of being intentional on telehealth as one of its key areas of focus. Take a step back, WELL has 6 business units today. It's a fairly decentralized company. Think of Warren Buffett's Berkshire Hathaway in terms of structure. We like to think of ourselves, aspirationally speaking, as, you know, the Berkshire Hathaway of tech-enabled healthcare. And so, you know, Warren Buffett, you know, buys companies and brings in management teams that are, you know, very strong companies and operate, you know, continue to operate on their own and create structures where they continue to stay. We do the same thing. And so today we have 6 business units, and there's a lot of focus in those business units on, you know, products and services like telehealth. And so we have a portfolio of telehealth systems and platforms, 2 up here in Canada, 1 in the United States, and one of the ones here in Canada operate, you know, globally in a few countries. So on a portfolio basis, we may be one of the largest, if not the largest, provider of telehealth in Canada. So we're really excited about that. And so, you know, we really believe that the pandemic has not just caused this acceleration during the pandemic, but it's going to cause a multi-year, you know, acceleration going on again for quite some time. And it's quite exciting to be in this field right now, because practitioners and patients now crave digital health, as opposed to before they were sort of waiting for it to arrive. And so I think that's a big part of, you know, our focus is now being this, the time is now. Now, you know, we need to deliver these products and services.
Definitely. So WELL has already made several key acquisitions this far in 2021. What does this rapid expansion mean for the company in the coming months and years?
Well, it really just means, I mean, we are the most valuable publicly traded company in Canada as it relates to digital health and tech-enabled healthcare. And having that first mover kind of positioning is really exciting, because what it means is that we've gotten a lot of support, we've got a lot of great investors, we have huge institutional backing, and I think what you're going to see with us is we're going to continue to be very active acquirers. Like each one of those business units that has its own business unit leader, very professional P&L focused leader that drives those businesses. Each one of those businesses is going to continue to run and drive these acquisitions and integrate them. So as you can imagine, well, it's not just one company, it's really a collection of companies with very talented management teams that are moving very fast and being very intentional about making excellent decisions with great discipline. We really think of ourselves as capital allocators, and we're allocating capital in great teams and great companies that are already successful. So I think it's a model that works very well, and I think you're going to continue to see a lot of momentum in the next few months and years.
So what does WELL look for in the companies that it is adding to its portfolio?
Well, sometimes what we look for is regional footprint expansion. So for example, with CRH, we are now going to be a majority US revenue company, and that helps pave the way for a US IPO for us, kind of like what Lightspeed did last year, that helped them really grow their value as well. And sometimes it's really about financial accretion. WELL requires very strong financial accretion with every deal that it does. We have distinctly focused frameworks of valuation for every division. We also look for some kind of strategic accretion, so wanting to get some kind of platform enhancement that comes with it, and ability that we didn't have before. And then we always talk about wanting to be culturally creative to WELL, and that means bring in people that we really appreciate, that will help us take us to the next level. People that are just cultural fits, and we think are fantastic people, and we're proud to serve shoulder to shoulder with them. So the company is very much I think focused on creating and maintaining a really solid culture as well.
Awesome. So now let's talk a little bit about your strategic investor. So WELL Health is backed by a business magnate and multi-billionaire, Li Ka-shing. So what caught his eye when it comes to WELL Health? And you did mention, you recently closed an upsized equity offering at a 25% premium. Can you talk a little bit more about that?
Yeah, listen, we're very grateful to have the incredible support that we have. Mr. Li Ka-shing has been involved with the story, since really the beginning, and came in and bought with his partner just under 20% of the business, even as we were getting started, because I'd already built a relationship with this partner prior to that for a number of years. And what's really exciting and remarkable about this story is that they have not only continued to invest, but increased their investment amount. So coming in he and his partner invested $100 million in that premium to market round, the 25% premium to market round that will close later on this week, likely. And that's great, because obviously he's a very wealthy and very successful person. But one of the things that I'm really proud of is he's not one of these guys that's ever had a scandal. He's incredibly well respected, and we've now become a bigger asset and focus point in their portfolio. So they're now starting to connect the dots for us, and we're not just another investment. When you come in and you allocate that kind of capital, it starts to really matter to your portfolio. And so beyond Mr. Li and his partner, another $202 million came in from about 8 institutions with a combined assets under management of about $500 billion. So these are household name funds, mostly in the US, mostly in Canada, one in the US. And that's another, tremendous proof point. This is why, and there's an incredible opportunity now for investors to invest, prior to the close of the transaction at a significant discount to what they're paying for their stock. So I don't think it's going to last, because I think it'll likely trade up eventually. But I think it's a great opportunity for your viewers to take advantage of that.
Definitely. So the acquisition of CRH Medical represented an important move into the U.S. market for WELL Health. It seems that WELL has received the support of some very prominent investors from the CRH transaction. What are investors so excited about, and why is CRH Medical a good entry point into U.S. healthcare?
Yeah, I think it's a great question. And going back to what I was saying earlier about CRH, it is incredibly profitable. These guys have made 32 or 33 acquisitions, and they've been incredibly consistent in the way that they've been doing them. So I think the average multiple that they've acquired, kind of the average blended multiple that they've acquired at is about 4.5 times EBITDA, which is extremely difficult to do. And so their profitability is very high, but it's not just the profitability that they bring to the company. It's what they've also shown is that it's an extensible, platform where they can continue to do these acquisitions with remarkable consistency. And so it's really a profit machine. That's the way we see it. And so, we think that we could double the profitability of CRH within 4 or 5 years, just based on their current run rate. And you'll continue to see, quite a bit of activity coming out of CRH in terms of their own M&A. So this is a management team and a company that has, distinct focus on a trade of business, and they've been executing extremely well, again, in a very impressive way. And I think that's one thing to think about. And the second thing is they are addressing and have a channel of 3,000 plus GI doctors, and WELL has all these digital, products and enablement tools, from digital patient engagement like telehealth, online patient booking, mobile check-in, stuff like that, to cybersecurity, data protection. Each one of these doctors has data that they need to protect, especially as they get more and more into digital health. More and more of that data comes online. And we also think, again, because of the GI nature of these practices, there's a huge movement towards chronic disease care management, digital health platforms that help physicians to assist their patients in getting better patient outcomes, with platforms that kind of nudge them to better health, accumulate data, are able to bring together sort of a care team that provides ongoing care and behavior change to the patient. A lot of people don't realize that a lot of chronic disease happens not because you have some strange illness, but because your behaviors cause you that. If you're smoking and drinking and eating the bad types of foods, but a lot of people don't know how to behave, unfortunately. And so these chronic disease care platforms really are built to bring data and teachings together. And so so they have 2 products and services today. We're going to expand that to 5 products and services. Simple, so we get this incredibly profitable channel, and we're going to look to even make it more profitable. That's the discipline that we're working with here, and that's why it's really exciting for us.
Very exciting times for you guys. So last but not least, how should investors get in contact with you or find out more information about WELL?
Yeah, thanks for asking. We're on all the different social channels. We've got a website at www.well.company. Probably the best place to go is just there, but you'll probably see us around all the different platforms, and don't hesitate to reach out in any one of those. And we look forward to answering any of your questions. We really appreciate all of your interest, and we hope, if your shareholders watching, we look forward to growing together, and thank you for your support.
Wonderful. Thank you so much, Ahmed. So I hope you have a great day.
Thank you very much. Really appreciate it.
All right, guys, that wraps up the video. Thank you so much for watching. I just wanted to say, if you do support me, the channel, and all these videos, then kindly smash that like button along with hitting the subscribe button and the bell for notifications for future videos. I did also want to say, check the disclaimer down below. This video was sponsored by the company that we are talking about today. So check the disclaimer, full disclosure, and we're out of here. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.